actual public companies and then actual infrastructure plays here. I think it should make for a great conversation, really about bringing these worlds all together into one. Stablecoins are now above $300 billion in terms of total supply. We've seen outstanding growth from Circle, from Tether. I think even Tether is now going to get an audit from KPMG. There's just a lot happening, a lot of new stablecoins as well. I'm curious how you guys are thinking about the kind of leaders in the market and their designs versus the newer kind of more yield-bearing, collateral-backed stablecoin designs, and kind of how you see this two-part world happening, right? So I think the correct kind of way to think about it is there's this kind of yield stablecoin and there's this genius compatible stablecoin now. Curious if that's how you guys see it, or really just how you see the evolution of the actual way that these stablecoins are being created. Maybe we can just go down the line here.
Oh, I feel like this is a perfect question
Matt,
for Nikhil. So I'm gonna lob it over there.
Yeah, I feel like the market is big enough for different versions of stablecoins, whether it's like Genius compliant or MiCA compliant stablecoins, or yield-bearing stablecoins that don't kind of fall within those regulatory structures. I feel we support, as an infrastructure player, we support kind of the widest range of assets and chains that we can, and we'll do whatever our developers tell us to do, right? We've seen, especially for payment use cases, developers want the compliant stablecoins because there are just deeper pools of liquidity. When we go to a new FX market, we're launching Colombia very soon, and we go talk to liquidity providers there, we'll usually end up getting quotes for USDC or USDT because those have kind of those network effects. They have regulatory stamps of approval, at least in one of those two cases, and that really just is very useful for payment flows. But I'm curious, Matt, if you have a take on this from Circle perspective.
Yeah, so naturally, as the issuer of USDC, we've gone down kind of the regulation first path. I think as the space continues to institutionalize, we see strong desire for kind of a trusted, unified liquidity layer across chain ecosystems and across protocols and applications. So different use cases will exist for different risk profiles and geographies and segmentations and that sort of thing. But at the end of the day, unification of user experience is kind of the number one thing we're leaning into, and excited to see all the growth happening right now.
Definitely the compliant stablecoin on our side. But jokes aside, yeah, I mean, and we don't really look at it in that exact way, where we look at it from a use case perspective, or we look at it from what consumer wants at the end of the day. And so that's sort of what drives our strategic decisions towards that space. So we don't really necessarily split it between compliant MiCA or Genius or yield bearing, but rather, I mean, we've just acquired BVNK, so I think I'm not necessarily going to get around this panel without sort of touching upon that. I'll keep it for a little bit later, but that's, I guess, a commitment towards our our evolution towards moving value globally and using stablecoin rails to do so. Not just the technology aspect of it, which obviously BVNK provides from a capability standpoint to our stack, but also the compliance, regulatory, licensing stack that we've acquired together with it, right? So I think it's the right balance between consumer protection, security, but also choice.
Yeah, and I think with this context, now that all of these fine gentlemen have talked about the different types of stablecoins, I think obviously to the end user, like they're not really caring whether it's going to be USDC or USDT, USDG. I think from a wallet infrastructure standpoint, the better that we're able to abstract all of those, and they see a single balance. If they're all stable coins, they should be able to see $1,000 regardless of whether it's like $200 that's split across a variety of different tokens or chains. And so I think from the wallet infrastructure perspective, excited to continue pushing the envelope in terms of how we create both a great developer and user experience.
Yeah, appreciate it. On the Mastercard side, do you guys see the quantity of stablecoins as a similar kind of growth path in terms of the quantity of payment networks. Like there's the Visas and the Mastercards, and it kind of consolidated into like what, you know, a handful of winners. We've got maybe several dozen stablecoins now. Do you guys see like, is there any similarities that you can draw to the early days of payment networks?
So there's a lot of sub questions in that question. I think firstly, if you have an old house, you don't just paint over it, right? If you have an old house and you want to refurbish it, you have to scrape off the old walls, you have to renovate the frames, the wood, you have to repaint the windows, and so on and so forth. And I guess the way we look at this is stablecoins are a bit of a gateway. They were a bit of an access bridge towards what blockchain technology has always promised, right? I.e. value moving at the speed of internet. And if you look at the financial infrastructure, companies like Mastercard, obviously we've been around for a while, and we've always innovated. Companies like Swift, who look at cross-border payments by default, they were built in, I don't know, the 1970s, maybe 75, 77, something like. So predates the infrastructure on which we move value globally, predates the internet economy, right? And in today's world, especially with agentic commerce happening, companies like Bridge, companies like Stripe, Tempo, NPP, X402 with Coinbase and iSkip, you've got on one side commerce that is, again, moving at the speed of internet, to put it that way, but value isn't, money isn't, right? And that's really the opportunity that blockchain brings, that stablecoin allows to accelerate at an institutional level for adoption, and again, that sort of fuels our decision process in terms of our multi-rail strategy has always been about offering choice in terms of, you know, I want to send value from A to Z, I want to be able to you know, provide payroll solutions, I want to be able to provide treasury solutions, and so on and so forth. And whether that happens, you know, on traditional rails or that happens with, you know, modern on-chain stablecoin rails, at the end of the day, the consumer doesn't care. The gentleman that was speaking right before, I forgot your name, sir, but I loved your introduction, in fact, in terms of when you were speaking about the UX and you were speaking about essentially almost reverse engineering the process whereby you look at a problem that you're trying to solve for. You're not looking at, well, I've got great tech. Undeniably, there's a lot of great tech out there in this world, but you're not building great tech to then push it towards something. You're looking at a real gap, a real problem, and then you're almost reverse engineering this into, well, what tech do we have available that solves for that, right? And that creates adoption, that creates scale adoption, and I thought it was illustrated very well again by this gentleman in the sense that this really becomes successful when a consumer essentially makes a payment and sends money from A to Z, doesn't know if it's on-chain, blockchain, swaps and bridges, or if it's fiat. You know, those terms don't really mean anything to them. They just paid, they just sent money, or they just received money, right? Long answer. I'm not even sure I touched on your questions, but sorry.
Yeah, please, Matt. Okay. On a similar vein, from the Bridge side, I'm curious how you guys are thinking about the expansion of stablecoin issuance demand that happened over the last 18 months or so, and then has kind of been hit with a shock of, hey, if you don't have a significant amount of capital ready to actually deploy into these stablecoins from, you know, essentially the first day, the business model doesn't really work in the way that people kind of dreamt that it would, such that the stablecoin issuance kind of concept, as far as being in a new issuer of a new stablecoin, is also kind of, you know, coming together in a consolidation process. I know that you guys and M0 and a couple had this massive kind of big push, and then now it's more like, hey guys, unless there's a big, like a really well thought through plan here, maybe it's not the best idea. I don't know if that's exactly what's happening, but talk us through how Bridge is kind of seeing the stablecoin issuer side change and evolve into a more complex market.
Yeah, we're obviously very bullish on issuance as a service. We are in the process of being chartered under Genius. So any developer who has a use case, whether that's kind of a closed loop use case, it might be within kind of their own ecosystem, right? Where they want to issue a stablecoin to incentivize users within their ecosystem to engage, and whether it's that use case or it's maybe a consortium of banks who want to do something with a shared stablecoin, or it's a cross-border use case and they really want to compete with the likes of USDC. We support all of these different use cases, and these developers come to us, and we basically are the kind of issuer on record, like in terms of the we have the license under Genius. Jackie from our team had a great discussion earlier today on all the different things that Bridge does, and it's not just kind of just minting and burning operations. It's making sure we have the reserves, like putting out kind of attestation for those reserves as required by the regulator, doing kind of KYC on individual end users who are interacting and getting kind of stablecoin balances credited to them. So Bridge kind of takes care of all of that, and we definitely see issuance as kind of a core part of our business, which also kind of drives orchestration volume for us, which is kind of how we started out, and that's still kind of our bread and butter. We've also support cards, so you can kind of issue cards on top of your stablecoin balances. So we really give you kind of all of the Lego blocks as a developer. And for a lot of those developers, issuance is like a key part of their strategy, but it's not for everyone, for sure. And we're still kind of learning and figuring out, like, okay, where does this really make sense? What use cases do we recommend developers issue their own stablecoin versus rely on something like USDC, which obviously has that brand value. But Matt, curious, again, what you think?
We are seeing stablecoins pop up in every corner of the ecosystem for different use cases. And again, USDC is a programmable building block upon which you can build whatever flow you want to, whether it's payroll, cross-border payments, perps, prediction markets, lending. It's pristine collateral for whatever it is you're looking to do, and we're going to keep putting it out there for people to sandbox on top of.
All right, let's talk about the agentic side of this. I think folks will really be excited and want to hear about whether you guys think this is fluff, hype, or how it's happening. Obviously, you guys are very involved on the Tempo side and the MPP side. On your side, Nikhil, I'm sure Mastercard is thinking about it. Privy has probably been building wallets for humans a bit too much, and now it's like, okay, nope, we need to build these things for agents. Curious kind of your take on this. So let's just go broad here. Where are we at in the state of agentic payments and agentic finance on chain? How real is this, and kind of what is the logical evolution you guys see to this interacting with stablecoins? I mean, we can go.
Yeah, I think when you say Privy's been building wallet infrastructure for humans for the past few years, while that may be true, is the exact same wallet infrastructure is being used by agents. So there's been absolutely nothing specifically that we've had to do to make the same secure, scalable infrastructure that we have for agents to use, right? I think both when we're looking at payments use cases, we all need programmable policy, human-defined guardrails, and agents need that too. Otherwise, your agent's going to run off and spend money that that you don't have. And so today at Privy, we're seeing over a third of new developers today are signing up for a Privy developer account and building for agentic use cases. So I think that momentum is very clear. Obviously, we've been doing a lot of work with X402 and then now with Tempo's MPP. We see them both as incredibly powerful protocols to allow for machine-native payments. So I would say that the landscape is still early. I think that we're seeing a lot of movement in terms of agentic payments and agentic commerce, but in terms of where it actually sticks the landing, it has to be a balanced development of both the supply side and the demand side. And I think we're seeing agents having the capability to buy things and to transact. But I think if we want it to be a fully developed ecosystem, then we also need on the merchant side to have wallets that can accept agentic payments that are coming through. And I think that's one bit that we're still probably earlier in that process of.
Yeah, I would say at Circle, we're very excited about agentic payments. Obviously, it's early. In many ways, there's a dissonance between the natural fit of stablecoins and blockchain for this type of economic activity, and then the fact that people's money will probably be the last thing that they trust AI with. So we're navigating that. Currently, the vast majority of on-chain agentic payments are happening in USDC via X402, which is really exciting. A lot of that's happening on Polygon, Base, Solana, et cetera, and we're certainly going to be building out those capabilities on Arc. I would say at Circle, our big focus right now is creating USDC primitives and developer tooling that enable people to use agentic applications on top of existing DeFi primitives and payments applications, and then also creating their own. So more to come on that in the months and years to come.
I mean, I mentioned it in my intro, right? My team actually looks at both, so I should have a compelling answer for you all. I don't. I think we're at the tip of the iceberg. I mean, this is all very nascent. It feels like, I mean, obviously Mastercard is playing this game, and obviously we're looking into how we structure ourselves strategically and tactically, and from a capabilities, from a people skill perspective, to really move into this sort of new agentic commerce economy. But it feels like from a sort of a zoom out, a market landscape perspective, it feels like everybody's hedging their bets. So everybody's putting a toe in, or some more than a toe, right? The Coinbases and the Stripes are clearly leading the market, and it's healthy to see that, right? So bold companies that have always innovated, that are sort of moving and dictating to some extent. And I think Mastercard has a role to play in there. I mean, we've been around. I think we have credibility. We have a global network of acceptance. So these are all things that were highly relevant for us. And the e-commerce boom, the digitization of the financial systems, it's relevant in crypto, blockchain, stablecoin still, right? It's something that speaks both to conveniency, utility. Consumers go anywhere, and it's accepted. You mentioned, I'm not sure we're there yet in terms of like trusting an agent with credentials or with payment information, with my money essentially. But everybody would trust their Visa or Mastercard network, right? Just because it's years and years of trust and credibility and protection building. And I think that's sort of the intersection. I guess that's one of the cards that we should be playing, is again putting forward our franchise network, our acceptance network, our compliance and protection standards, so that the consumer essentially feels comfortable, feels secure, delegating payment credentials to an agent, so that that removes a whole world of friction, right? Because today everybody here is probably on GPT or some other platform right now, gathering information or collecting information at the speed of light. But when it comes to then purchasing, we're not just there yet. You mentioned in your question, agentic commerce or agentic finance. These are still, in my view, a little bit siloed from each other, and then we need to build that convergence. And companies like the ones on the panel are doing just that. So it's about building that trust, so that allowing my agent to pay on my behalf, whether I'm a consumer or I'm a business. A huge potential, but trillions of dollars of value of potential there. Obviously, it's the next big economy. It's about delegating control, delegating my credentials in a secure way. We've done this with tokenization, right? We've been tokenizing information, like a card PAN, for years now, so that you feel secure putting your card on file, recurring payments on Netflix or Shopify, right? Credentials that are not actually exposed there with tokenization. So I guess a similar trend for storing cards and delegating the payment information to an agent via secure tokenization methods.
I wanted to add one thing in that, and I think this is one problem that we're all trying to solve for agents, is that, obviously we can tell an agent, we can program a policy saying that you can't spend more than $10 in a day, for example. And I think, obviously, when you have a wallet, there's also only a certain amount of balance at which that you can draw from. But I think one thing that we've seen definitely demand from developers, and that we've been trying to figure out how we solve as an ecosystem, is how do we enable agents, how do we issue cards to an agent? How does an agent get a card where they're not using my personal like Visa, Mastercard information, but they have the ability to have their own cards. But yet, at the same time, how do we get around that, since there's no obvious kind of KYC for an agent? But
Sure, and
Massimo's going to solve it.
No, and our cards, the right payment methods, right? Cards been around for a while, right? So of course, I hope there's no journalist in the room, but and I shouldn't be saying this, but obviously I spoke to all the benefits of the network that we've built, but When you look at the agentic commerce space, a big friction point is it's a lot of micropayments, right? It's a lot of I don't, essentially, and cards are not necessarily the best tool for micropayments, low-value payments, right? So we need to solve for that, and we are. But there's all the tools out there, right, that these folks are building, right? So always we look at this very agnostically on our side, and we try to hedge our bets to play the next 10, 20 years in this space.
Yeah, man, I'm curious how you think about that identity problem on chain. Like, how do you, if you had to take a prediction on how you think that may play out of like these agentic identity enabling actual commerce to happen?
It's tough to project. I would say at Circle, we've often kind of toyed around with where does decentralized identity go. As far as on the agentic side, our focus is probably more squarely on building tooling and letting others solve the identity piece.
I'm curious on the Mastercard side if the purchase of BVNK had to do with the rise in stablecoins potentially for agentic flows. I mean, I think that there's this big kind of drama ongoing about whether agents will use stablecoins or credit cards, and you kind of just mentioned that. What's the kind of state of affairs internally as far as how the team is thinking about using stablecoins or credit cards?
So BVNK is very fresh. As you can see, we're a big company. So I was discussing this with Debbie. It takes time for us to properly absorb and make best use of this outstanding technology and the great people that come with it. Now, again, a few layers of answers. I'll try to be brief because I feel like I monopolize here. No, we didn't acquire BVNK solely with the purpose of us getting a foot in the door for agentic payments. I think there's already, obviously that's a great segue into that, right? I'm not saying the opposite, but I think that the rationale was already there before, just from the maturity of stablecoin and the sort of blockchain DeFi market as a standalone. I think someone mentioned it earlier, maybe it was you, but today the transaction volume and value of stablecoins surpass the amount that's going through Visa, Mastercard networks. So, scales here, like, we're not validating this anymore. It's there. There's huge institutional adoption. There's very clear use cases, whether it's B2B, whether it's B2C, whether, so we need to play that game. And yeah, I mean, from Mastercard, it's always, not just for us, but it's always either you partner, either you build, or either you buy. And one doesn't exclude the other, so we're always very build focused. We have our network, and we're complementing this with acquisitions such as BVNK. We acquire BVNK, again, because there's a technical stack. There's stablecoin rails that come with that from a technical perspective, but there's also a series of compliance and regulatory stacks that come with it, right? Again, bridging the worlds of TradFi with DeFi is extremely important, and we can't do that on our own. We always rely on partnerships, and then partnership is the third thing. It's not because we've acquired BVNK that we remove ourselves from being agnostic into the market, right? We still are highly dependent, and we're highly supportive of partnerships with the likes of all of these guys and more. That's our bread and butter, and that's how we move forward in highly disruptive spaces, not by trying to sit in the middle and control everything, but rather to say, well, hey, we know where our value is. It's not in being fast, quick, and nimble in blockchain technology. Like, that's not what we're native for. Most of these guys are, right? So we need to work with them. They bring that value. We need to see what value they bring to the table and work together on that.
Yeah, awesome. On the bridge side, you, Privy, and Stripe have this kind of trifecta here of enabling actual commerce, e-commerce, stablecoin creation. It's this whole kind of beautiful thing that you've created from your perspective. Just curious, like, what the core USP is here. Like, what is the core kind of outcome of these three companies building together for the stablecoin economy?
I don't know if we've thought about like this grand strategy across all companies.
I think the market sees it that way. It's like this kind of
I think
cabal.
I think we're trying to cross the river by feeling the stones, so to speak. We want to support like all of these companies that you mentioned. We still kind of operate very independently. However, we do collaborate deeply on a bunch of use cases as well. One example of this, which relates to agentic, is Stripe recently basically turned on stablecoin acceptance for all the merchants on the Stripe network. And Bridge's goal, Privy is powering those wallets. Bridge is basically enabling any developer to specify which combination of asset and rail that they want to use. So you can specify, let's say, accept in euros via SEPA, settle in USDC on base. Bridge is pretty much agnostic and will support anything that is on our platform today. And so I think our goal is to just enable the greatest breadth of use cases for our developers, whether it's accepting payments, whether they're building a neobank on top of stablecoins, or they're a traditional kind of payments player like Mastercard, and we're collaborating on cards. We kind of do everything, and yeah, we're overall just very bullish about stablecoins and its ability to just help us serve new use cases.
Curious your perspective as well.
Yeah, no, I mean, I think like obviously we all make up a very comprehensive stack, which is what we're excited about. I think at the same time, like we do operate independently to some extent. There is definitely a focus on at hand, what does the customer want? Bridge and even Stripe doesn't have licensing coverage in every single part of the world. So there might be an instance where Privy is working with a customer that needs a particular geographic coverage, and that requires us having to work with other people. But I think obviously when you look at all three companies together, you can look at Privy wallets as the bank account, and then we have Bridge, who is the bank basically, and then Stripe, which are the underlying rails on which all of this lies on, and you kind of throw in Tempo, but maybe there's like a bunch of other rails that we all again have to support, Solana, Base, and all of these other chains. So I think that the pie, like obviously it's a very big pie as it is, as you've already mentioned in your opening, but there is so much more that I feel like that we can do together to continue growing it and making it sure that there's composability between all of these different systems.
Amazing. Matt, one of the things that's kind of holding back this pie is on the regulatory side in DC. We're seeing just a lot of pushback on different parts of this clarity bill, specifically around stablecoin yield. Circle's got a very interesting spot in that kind of whole concoction, if you will. Brian Armstrong's obviously playing a very strong role in trying to push forward the interests of the entire ecosystem, as well as Coinbase's private interests. I'm curious from the Circle side, really what the unlock from clarity getting through will look like, and just generally how you are analyzing the stablecoin yield passover issue. Right now, it looks like it's essentially on idle balances, not being able to pass back. There has to be some sort of like deposit function. How does Circle think about the Clarity Act and stablecoin yield?
Yeah, so I would say that market structure regulation is a huge unlock for the space. As far as the where the exact line items fall, I can't really comment. I will say like we're really excited about Genius. Genius obviously has opened up like a whole breadth of new use cases, enterprise, institutional payments, which everyone on this panel is really benefiting from and relishing in. So for us, seeing new entrants come into the space, GSIBs that weren't interested previously, payments processors, traditional Web 2s, our focus is really on those growth vectors, and excited to see where the market structure falls.
And Nikhil, with your recent announcement of the OCC charter, what does that enable for Bridge and the broader space at large?
Well, one, it makes my job much easier because I have to convince all of our bank partners that they should support X, Y, and Z with us. And so once you have that regulatory stamp of approval, that just becomes way easier because now this is like an understood thing. We have the OCC kind of directly supervising us, and so it just makes just that TradFi collaboration, I would say, just way easier. Same in Europe, I would say, with MiCA, and we're also getting licensed to issue stablecoins in Europe. It just makes like, our ability to transact across borders just much easier.
Awesome. Last thing for you from the Mastercard side, or maybe just from your personal side, Max. I think experts are estimating about a 40 to 50% year-over-year growth in stablecoins 2026, and then likely slightly larger in 2027. Are you taking the over or the under on this?
Right on the spot. I'll be there, right? So I think, I'm not going to over advance myself, but I think it's obviously the institutional adoption traction that it's getting, I think is a good sentiment towards this. There's a trend that's going to keep continue. I can't answer exactly, so I'll say around those trenches. But certainly, I think adoption is there, and I think the next few years are going to see tremendous growth.
Ladies and gentlemen, give it up for your panelists today, guys. Thank you so much.
All right. Well, I want to say before everybody heads out, we do have one more panel before we have a lunch break. So if you want to hang around to hear about from Treasury to strategy, how capital gets managed on chain, we'll be joined by Charles from the Ethereum Foundation, Martine from Maple, and Sophia from Mello. So as they take the time to come over to the stage for their panel, we'll be doing about an hour-long lunch break after this. And so after that, we'll come back, and then we will do, we'll talk about RWAs and the rest of the panel for today. Where am I? Do you know who I am?